When the pandemic started, global inflation was essentially declining, and the downward trend persisted during the early months of the crisis. But since late 2020, rising costs have progressively increased inflation. The average cost of living has increased more globally in the 18 months since the year 2021 began than it did in the 5 years prior put together. The video is going to be very interesting, so make sure you stick to the end. Before we continue to our video, make sure to smash the like button, subscribe to our channel, and hit the bell icon to never miss any of our future uploads. Now let's get started. According to our chart of the week, the main causes of this inflation are food and energy. In fact, since the beginning of the previous year, the average contributions from food alone have been higher than the entire average rate of inflation between 2016 and 2020. In other words, the rate at which food inflation alone has lowered living standards worldwide is equal to the rate at which overall consumer inflation increased in the 5 years prior to the pandemic. The same is true for energy costs, which are reflected both directly and indirectly in increased transportation expenses. This is not to imply that the cost of other goods isn't also going up. For instance, the cost of services has gone up in both the US and the Eurozone. Additionally, there are significant regional differences in the relative contribution of food, energy, and other things to inflation. Average annual inflation rate. In 37 of these 44 countries, where COVID-19 was just starting to spread fatally, the average annual inflation rate in the first quarter of current year was at least twice as high as it was in the same period in 2020. First quarter inflation was more than 4 times higher in 16 countries than it had been 2 years earlier. Data is used from the Organization for Economic Cooperation and Development, a collection of generally democratic, economically industrialized nations, for this analysis. The data includes 7 additional economically significant countries in addition to 37 of the 38 OECD members. Turkey had the highest inflation rate among the surveyed nations in the first quarter of 2022, with a startling 54.8%. Turkey has long had high inflation, but in late 2021 it spiked as a result of the government's unconventional economic measures, which included reducing interest rates rather than raising them. The country where inflation has grown fastest over the past 2 years is Israel. The annual inflation rate in Israel had been below 2.0%, and not infrequently negative every quarter from the start of 2012 through mid-2021. In the first quarter of 2020, the rate was 0.13%. But after a relatively mild recession, Israel's consumer price index began rising quickly. It averaged 3.36% in the first quarter of this year, more than 25 times the inflation rate in the same period in 2020. Reasons of inflation. Regardless of the absolute level of inflation in each nation, the majority of them exhibit variations of the same basic pattern, relatively low levels prior to the COVID-19 pandemic, flat or declining rates for the remainder of that year and into 2021 as many governments sharply curtailed most economic activity, and rising rates beginning in mid to late 2021 as the world struggled to return to something resembling normal. U.S. inflation rate has almost quadrupled over past 2 years, but in many countries it's risen even faster. Israel has had the fastest rate of inflation growth over the past 2 years. From the beginning of 2012 through the middle of 2021, Israel's annual inflation rate averaged below 2.0%, and occasionally even below zero. In the first quarter of 2020, it was 0.13%. Israel's consumer price index, however, started to rise swiftly after a brief period of recession. In the first quarter of this year, it averaged 3.36%, which is more than 25 times more than the inflation rate for the same period in 2020. But since then, prices have skyrocketed. In Greece, the annual inflation rate for the first quarter of this year was 7.44%, nearly 21 times higher than it had been 2 years prior. 0.36%. Inflation in the United States was the 13th highest among the 44 nations studied in the first quarter of this year, averaging little under 8.0% annually. In the United States, the first quarter inflation rate was nearly 4 times higher than it was in the same period in 2020. No matter how high inflation is globally, most nations exhibit variations of the same basic pattern. Before the COVID-19 epidemic struck in the first quarter of 2020, at relatively low levels, flat or declining rates for the remainder of that year and into 2021, when many governments significantly limited most economic activity. Energy-dependent countries under pressure. This is the first of a new series of quarterly articles that will highlight significant findings from Euromonitor's Global Inflation Tracking Report as inflation continues to dominate the world economy. Following Russia's invasion of Ukraine in Q2 2022, there has been an upsurge in global inflationary pressures. Global price rise is quickening due to issues with supply chains and transportation, increased volatility, and rising energy, food, and commodity prices. Due to weaker private sector confidence and spending, the war will also help to reduce some inflationary pressures, but overall, inflation is expected to increase in 2022-2023. Overall, countries with greater energy dependency will feel higher inflationary effects in 2022, with inflation forecast to remain at elevated levels in 2022-2023. Consumers and businesses in both emerging and developed economies will increasingly feel the squeeze of rising prices. Higher prices will also add more pressure to the profit margins of businesses. Rising commodity and energy prices accelerate inflation growth. Number 1. In the U.S., inflation is anticipated to reach 7.5% in 2022. Following the epidemic, workforce shortages and supply chain disruptions contributed to an increase in inflation. Interest rates are rising as a result of actions taken by the Federal Reserve, Fed. However, it is becoming increasingly challenging to control inflation to the 2% objective due to the tight labor market and rising global commodity costs. Number 2. The inflation rate in the UK is forecast to reach 7.5% in 2022. The increase in inflation is being driven by rising fuel and energy prices, household services, and transportation costs. Pent-up demand accumulated during the pandemic and brute-caused labor shortages are also contributing to faster price growth. The Bank of England has increased the interest rate to counter inflation, although supply chain disruptions are likely to continue to add to inflationary pressures in 2022. Number 3. The inflation rate in Brazil is forecast to reach 9.7% in 2022. Global supply chain disruptions and rising commodity prices are resulting in faster producer and consumer price growth. Furthermore, Brazil's depreciating currency is also adding inflationary pressures, as imported goods are becoming more expensive. Brazil's real is forecast to drop 7% in value against the US dollar in 2022 on the back of political uncertainties. And number 4. The inflation rate in China is forecast to reach 2.7% in 2022. China's zero-COVID policy and efforts to decelerate the growth of the real estate sector are resulting in slower economic growth and in turn a lower inflation rate. However, China remains vulnerable to potential price increases due to rising energy and agricultural commodity prices. As of 2021, China imported 49% of crude oil and gas. Hope you guys enjoyed our video. Make sure to subscribe to our channel and hit the bell icon for more videos. Thanks for watching.